The official cash rate, or the OCR, don't we love it? It's in the headlines at the moment, with the Reserve Bank cutting the rate yesterday from 5.5 down to 5.25. But here's a question: why are mortgage rates always a few percentage points higher? Well, it's always been like that. Look at this graph. It perfectly illustrates what I'm getting at. The average one-year fixed mortgage rate has been around 2% higher than the OCR for the last 10 years. So what's up with that discrepancy? Well, it's essentially wriggle room for banks to balance all of their costs, all of their risks, but also to make a profit. Let me explain a few things. Firstly, where do banks get their money from? Well, the vast bulk of it comes from these three places. First of all, customer savings that are deposited in the banks. There are loans from large banks and financial institutions overseas, and sometimes from the Reserve Bank, and there are shares from shareholders. They also have money in the form of returns that it gets from its investments. The interest from the money that's required to hold at the Reserve Bank, it gets returns from things called liquid assets. There's interest from credit card debt, interest from those with business loans, and interest from home loans. Now, in terms of their outgoings, the bulk of their outgoings are the loans to households, the loans to businesses, the credit card debt, the big deposit that it has at the Reserve Bank, that's known as settlement cash, and of course buying liquid assets. But they also have to pay interest to their customers who have got savings deposits with them. They've got to pay interest to the financial institutions that it's borrowed from, and it's got to pay returns to its shareholders. So there's a lot going on there, and it's an almighty balancing act between the two, with both of them in a constant state of flux. Overall, though, they need to make sure that more money is coming in than going out, and so they charge higher interest rates to those downstream from them than the ones they pay upstream. Now, there are a few other factors as well that mean mortgage rates are higher as well. Banks need to account for risk of defaults or repayment delays, and they need to cover their operating costs. These are things like paying for staff or paying rent, building fit-outs, paying admin costs, IT costs. That list, it does go on, and then they must ensure they're making a profit, just like any other business. So we've got all of these things, they compound, and they mean that mortgage rates that households and businesses pay, they're always a couple of percent higher than the official cash rate.